All right, a quick look at where we ended the day. It was a Monday in the red for the North American markets, with the TSX dropping 141 points today, about almost 0.5%. And the S&P 500 23 point down, so 0.4%. The NASDAQ Composite losing 32 points today, so it's at 23,545. Can we take a look at some of the movers in Toronto? We had a deal for one company that meant a big jump in its share price today. Transcontinental gained 19%, so it's up 33% over the year. But it announced a deal selling part of its business, moving the stock up $3.79 to $23.66. So that was the biggest mover on the markets today. Washington has stacked tariffs on many countries around the world, but it hasn't stopped China from reporting a $1 trillion-plus trade surplus. The European Union, Africa are some of the countries offsetting American demand. Let's go to Sean King. He's Senior Vice President at Park Strategies. We'll talk some more about this. Thanks for your time today.
You got it.
We often talk about how difficult it is for countries to find new trading partners. Clearly not the case for China. Why is that?
Yeah, and when we say $1 trillion surplus, it's not with any one country, but the world. China's economy is a state-driven model that's very internally focused. Part of that surplus is due to the weakness of the Chinese consumer. Their imports are much less than in other countries. But I think Beijing is smart enough to look around demand from the U.S. in the wake of the tariff war and double down on other markets and other free trade arrangements it has around the world. So while exports to the U.S. are down 29% year on year, and they probably really would have been worse if not for U.S. customers front-loading to avoid the pending tariffs, they've doubled down on markets in Africa, Southeast Asia, and even windbag Europe, who's always rightfully complaining how much Beijing is enabling Moscow's war machine in Ukraine. But their purchases from mainland China are up 15%. So while we sort of entrench and scold our allies, China's looking for more opportunities around us, and that's not good. Okay, so is it clear what kind of goods some of these other countries are picking up that perhaps originally were destined for the U.S.? Well, a lot of it is low-end stuff like toys and clothes, but also technology, also critical minerals and rare earths. And just in the interest of full disclosure, we represent a tungsten producer called Almonte Industries, which is sometimes lumped into this space. So a lot of the same stuff, everything from shoes to high-end tech gear that they were selling to us, they're now selling to other countries.
Okay, and
more of it.
I also wanted to find out if we understand yet what the U.S. front-loaded from China, what they're not bringing in these days. And I'm sure China has found some workarounds to still get some things into the U.S., but seemingly it doesn't trace back to China.
Yeah, I mean, the fear is that they're using countries like Vietnam as ways to launder trade into the U.S., and customs officials are very alert for that. And a lot of U.S. importers bought a lot of goods early and then were upset when Trump then put off certain tariffs or delayed others, saying that we bought all this stuff ahead of time, and now you're putting off these tariffs. I mean, part of the problem with Trump, too, is that the tariffs are on again, they're off again. China, say what you will, at least they're consistent. You know where they're coming from, and they're going to sell to any autocratic regime anywhere in the world. And then even though it's U.S. importers who are on the hook to pay the duties, sometimes they work out a back deal with their mainland Chinese supplier to cover the costs or split the cost between them. But that may only last for so long. If this goes on for another year or so, mainland Chinese suppliers may just tell U.S. buyers to look elsewhere, that they're on the hook totally for the tariffs themselves. So we're in very uncertain, uncharted waters here.
Are you surprised that trade, worldwide trade, has not just been completely paralyzed? Because as you mentioned, at the border for the U.S., they've got to try and figure out where goods are coming from, if there's a workaround at play, if they're originally from China but coming through Vietnam. And there's so much that passed through so easily before. Are you surprised we aren't seeing more paralysis around trade routes?
No, because the U.S. is not as export dependent as other countries and import dependent as other countries are anyway. You know, as I've joked in this show before, Bono from U2 once said America is not a country, it's a continent. So we need the outside world less than other countries do. And while we're entrenching, a lot of other countries are reaching out. China and India are part of this regional comprehensive economic partnership. You see Japan and now Britain. Japan's taken leadership up, and Britain has joined the Trans-Pacific Partnership, which we unfortunately left in 2017. You see Canadian Prime Minister Carney at the G20 looking for new opportunities and trying to mend fences with India. And obviously, Europe is looking for alternatives and trading a lot within itself. So just because we're turning inwards doesn't mean the rest of the world is waiting. They still need stuff, and they're smart enough to see the opportunities elsewhere. So no, the net numbers for the world as a whole do not surprise me.
Can you see other countries becoming more protectionist as a result of what's going on in the U.S.?
Not necessarily. I think they are becoming more protectionist, maybe in response to what we're doing. So they may put up walls to get the U.S. back for what we've done to them. And hopefully, they've become more protectionist against unfriendly regimes like mainland China. Now, I've lived enough around the world to know that there's a lot of resentment of the U.S. and other countries, but there's a lot of goodwill toward the U.S. right now, basically because people are so upset with Beijing and Moscow on various human rights and other national security issues. Particularly in Asia, I see in South Korea and Japan, there's a very pronounced pro-American feeling, and people want to do more business with us. But they feel it's unrequited love, that we don't love them back as much as they love us. So other countries, again, are smart enough to break down barriers between and amongst themselves to possibly make up for the shortfall in U.S. trade and investment.
All right,
and I see that in Asia a lot.
To go back to what we started this discussion with, and China and the amount of exports being over $1 trillion, you mentioned that it is on the backs essentially of the Chinese civilians, the Chinese workers in the country. Can you see that changing at all?
No, I see it's a state directive mercantilist system. And this China 2025, which has kind of been forgotten about, but China seeks self-reliance, especially in technology, so it can use it to control and coerce its own citizens without dependence on foreign sources. But I see China also looking inward, doing more business with autocratic regimes like North Korea, Iran, and Russia, and also in the Middle East. And I don't see, unless the Communist Party is going to be out of business, which I don't see happening anytime soon. I mean, they just staged fake elections again in Hong Kong yesterday. I see the Chinese model continuing, if not strengthening, and becoming more inward and closed.
All right, Sean King, I got to leave it there, sir. Sean, Senior Vice President, Park Strategies, thanks for your time.